What's going on, everyone? It's your boy, Momo Trades. We're looking at ES Futures, and if you guys are looking for a successful path in your day trading career, if you've been struggling, you've been all over the place, letting your emotions get the best of you, and you don't really have a system in place, this video is going to be right for you. We're going to be doing a live bar-by-bar analysis, analyzing a bunch of different trades, winning and losing ones. We're going to do a little bit different style of video today. We're going to kind of test the audience and myself. We're going to mark several different trades. Some worked out, some didn't. So let's get into the video. So right now, the market hasn't opened yet. We're about 2 hours until market open, and we have this nice, concise little downtrend. So what do? We draw our trend channels, and we expect after we have a break to test the new low. And only then can we start thinking that we could potentially be in a trading range, and we might think that prices could start to reverse. So at this point, the market is about 1 hour before open, and we're just extremely sideways. Now we're opening right at this area, 6:30 Pacific, 9:30 a.m. Eastern, and it's really just a no trade zone. We see that there's a lot of support at this level, so really there's no more downward bias. If anything, we're going to be looking to go long. If we trade above the EMA, we're going to be looking to get a nice long entry. But going back to why you might have clicked on this video, day trading is not a short-term game. It's not a get-rich-quick scheme. It's something that you're going to have to take time and patience every single day, day in and day out, and don't expect to make money right off the bat, because you will be emotional, you will have mental instability, and the way to get over that is by getting a nice trading system down, anchoring on your chart reading skills, and really just getting into the weeds, studying the charts, and then you'll learn to only take trades that follow your rules. And as long as you take trades that follow your rules, they're not going to work out 100% of the time, but you can at least get the mental side in check, and you can be proud of the trades that you take. So in this case, like we've been saying, we're looking to get a potential long entry above the EMA. We have one right here. It is a new low. We went up above the EMA. We have a first entry short, traded up again. We have a second entry short that failed with this nice bullish bar. So if the next bar breaks above that, that technically created a failed second entry short. Now, can we take this trade? You might say yes, you might say no, but in my experience, when you're taking a failure or any trade at the top of a range, so we have a mini trading range right here. We already have touched 3 times. We could go lower, we could go higher. There's no clear market direction. The trade worked out, but I would stay away from this one, even though it would have worked out for a scalp. I believe it would have worked out barely for a 1-point scalp, but then we ended up reversing. And eventually, we did start trending higher. So once again, I still don't see anything too nice. We want to look for a nice two-legged pullback at the EMA. So we could potentially draw a trend channel, because it does look like we are bouncing off the bottom side several times. At the top side, we're getting some confirmation. So let's see if we can get any two-legged pullback. And we do get a lot of sideways movement, sideways bars. So once again, we just draw a congestion zone, and let's see if we can get a failed breakout. So we do get a sort of failed breakout here. I did mark this trade, not because it's a particularly great one, but it does follow the criteria of what we should be looking for. So we have an uptrend. If we zoom out, we're expecting to go to the highs of the day. We have this concise range. It resembles a hidden second entry long. It's getting to be a little bit more advanced, but we have one leg down here, a slight break, new low. We're breaking out of the range, and we have a nice bullish signal bar. But the reason I would potentially or probably stay away from this trade is simply because we'd be going long right into the EMA, and it's just very close to the midline of the range. It did work out, but if you want to, once again, get control of the mental game, get control of day trading in general, even though you might have taken this trade, you could see the same thing appear tomorrow or later in the day where it resembles a failed breakout, but you're going right into the EMA and it wouldn't have worked out. So that would be a trade that I would not be proud of. And then it would just lead to a cycle of negative trades. It could then just lead to a landslide of different emotions and pulling the trigger on trades that you know you shouldn't take, even though they've worked out in the past, because even if you take any trade, you still have a 50-50 chance of it going up 1 point or down 1 point. So just make sure you follow a system of rules in place, and even though you might break the rules sometimes, try not to, because you're going to get rewarded sometimes, but then it's just going to lead to a cycle of bad habits. So now we are approaching the high of the day. We reached the high of the day, and we did have a break and a new high of this uptrend. So we want to pause on looking for long entries, and we want to start actually looking if we get any reasons to sell. So what do we have? We have another second entry short here. Can we take it though? So we have a new low, we have a leg up, we have a first entry short, we have a leg up. We don't technically break below the high of the move, but if we do break below this bear signal bar, it resembles a second entry short. Once again, can we take it? I would not, simply because look how many bars are stacked in a row. Starting from here, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. About 14 bars basically sideways, even though we want to be selling at the top of this congestion. Once again, you'd just be selling right into the middle of it. Not to mention, we have an area of support here. We already bounced twice. We bounced 3 times, basically 4 times. So even though at an overall level, okay, we might be looking for reason to go short, it still has to be a nice setup. We can't just pull the trigger on any bullish or bearish bar. And the main thing here is look how many bars are stacked. Just stay away from that, and you would have got trapped if you did sell right there. So now I marked another trade right here. What do we have? We have a new low. We have a first entry short, second entry short that failed. We already went over that. And then this bullish bar here is sort of a higher low, confirming that failed second entry short, as well as a more nuanced breakout pullback pattern. So this resistance area or support area, however you want to look at it, is now getting tested once again with a nice bullish bar, because what we've been having resembles another sort of range within a range. We went from the lows to the highs, back to the lows. I'm expecting to test the highs of the day again. Honestly, I would not fault someone for taking this trade. It looks like a great trade simply because it traded below into the congestion area, closed on its high. It's a higher low, once again, of the failed second entry short. All the people who were trying to sell simply because we were potentially going to go lower back to the lows of the day if we were in a big range are going to get trapped once again. And that's why we did end up trading higher, made a new high once again. But even though we're making a new high, and we made a new high and are potentially going to go higher, doesn't mean that, okay, all the shorts got trapped here, let's pile on the longs, let's only look for longs. No, you have to be able to quickly switch gears and reassess what's happening. It doesn't have to, just because we reach a new high of the day here doesn't mean immediately we're going to start going back down to the lows of the day. No. We have to reassess every single bar, what it's telling us, what the language of the markets are telling us. So here, some beginner traders might look at this and be like, oh, let's just redraw our trend channel. It looks like we actually have a beautiful uptrend right here. Let's look for any reason to go long. When in reality, okay, you could definitely draw this. It looks all right, but the top side only has 2 confirmations, and Okay, yeah, maybe you could extend it and you have a third confirmation, but look at all this white space. It doesn't add up. So even though it might in fact be a possibility that we're going to trade higher, we cannot ignore that we already bounced here once in the overnight session, twice. This is the third time. So here we get another sort of higher low of a second entry long, new high, first entry long, second entry long, higher low. So if you went long right here, you might be thinking, oh, that's a great opportunity to go long. Look at all of this area of bounce, or I don't even know what you want to call it, but this confirmation area where we're bouncing perfectly off that little trend line. But you'd be going long right into where really you should be thinking to sell. And this is an excellent trade right here, because if you did go long right here, yeah, it's a nice signal bar. It's a nice higher low. If you're just a pattern trader, you might take that all day, but you're ignoring the overall context. This bullish trap or bearish trap bar is the trade to take. It's a first entry long, second entry long, failure, double trap. It's also, if you're counting from this low, we went up. We have a first entry short. We went up again. Second entry short. Take that trade all day. Look how many times we're bouncing at this level. No reason to force a long trade. Just be patient. Don't overthink it. Just think common sense wise. And that's why we ended up trading lower again. So now we just have some more price action within this range. And we're getting to the top of the range. So we're expecting to go back low. And we do get a second entry short. Now in real time, I'll admit it, I did take this trade because I drew this sort of concise little trend channel. We have a new low, first entry short, second entry short. We didn't quite reach the lows of the range we've been playing. So for those reasons, I mean, look at this excellent signal bar. I went short right there and I got trapped. But what did we get again? We got another opportunity to go short in a double trap. So even though, in my opinion, the context, the signal bar, the reasons to go short all were great, sometimes it just doesn't work out. You might have misread something, but don't sweat it. Don't be the guy to just shut your computer off and be pissed that you had a losing trade. You know what? I had a losing trade and I didn't get phased at all, because I knew, you know what? I was proud of the trade. I waited. I was patient. I thought it followed my rules. It did follow my rules, and that's okay, because I was able to make it back by taking the trade right after, which is really a double trap. So new low, first entry short, second entry short, failure, trap. So basically, all the people who went short where I did, they got trapped, but then also the people who are trying to trap the shorts by going long right here, they're also going to get trapped, and it just adds more momentum to the trade, because people who are in the same situation as me, they're going to pile on to their shorts, and then those who were trying to go long, expecting to go to a new high, they're also going to start selling their positions, and then we ended up going lower. So this is a sort of more aggressive trade right here. So we had this trend, we had a break, clear new low. We're very far away from the EMA. We're still playing these range rules, so a ton of support at the level. If you want to buy at this level, honestly, this failed breakout, not a bad trade. It worked out for a nice scalp. And then really the rest of the day, there wasn't anything too enticing. I mean, look at all this sideways movement, sideways movement, sideways movement. And eventually we just broke out of the range at the end of the day. But that's going to wrap up the video. Hope you guys learned something. If you guys did, or you want to know, if you have any questions for me to answer, leave a comment. Let me know what you guys want from me next. Have a good one. Check out the links in my description if you want to start trading with Apex Trader Funding, or if you want to use a trade copier. Have a good one, guys. Good luck in your markets. Peace out.